Just to let you know, the good, the bad, and the ugly. And in 35 years, up until right now, we've only had one losing deal in 35 years. And the market is just very, very tough. The good side of that is now is the time to come in. Anybody that's been a sponsor or been investing since 2012 has only made money because it's been just straight up. So coming in now, I don't know if is anybody new to real estate? Or actually, I'm only talking about real estate. You guys talk about everything, don't you? Okay, well, I'm only talking about real estate. With the interest rates that went down, cap rate compression, everything went up, everybody was a hero. It was easy to raise money. We've got over 1,000 investors, active investors, and 85% of those reinvest with us. And a big part of that is because of communication. And even when we have problems, we don't stick our head in the sand. I'm going to go ahead and say it this way. We've got one asset right now that is in trouble. And I am absolutely crushed because of the problems we're having with that asset. Our investors are going to lose about 70% of their money. And these are the things that nobody else talks about. Anybody else, they're going to come up here and say how great they are and everything else. But, you know, you got to be real. And in that loss of 70%, like I said, it's only the second time in 35 years. It is absolutely devastating. Now, it's not gone yet. We're still fighting. We're still completely fighting. I pulled a rabbit out of my hat before. But character, it's easy to talk about character when there's no problems happening. It's real easy to go ahead and talk about that. But when you're tested is when character really comes through. And so a big part of what we talk about, we've always talked about transparency and telling the good, the bad, and the ugly. And most of the time, it's all been good. But in communicating with the partner saying that they're losing a tremendous amount of money, I have been so humbled and so, it gets me emotional thinking about it, I'm sorry, how great they have been. Somebody told me that I invested in somebody else's deal and I lost 100%. I'm like, well, you win some, you lose some. I understand that. That's why I only invest in my own deals. But so many of them are, yeah, I understand that, and, you know, and it's all about the communication back with them so that they know what's going on. It's just all of a sudden it didn't hit them. We've been saying, here's where challenges, here's what we're doing, here's how we're handling them. And, you know, you're all professionals in here. You all have business experience. You all have been in business. You're all doing something. And that communication with those partners, whether it's your lender, who's your number one friggin' partner, they put the most money into it. You can't neglect them. That's the first call. You have a problem on a property. First call, I want you to know about this before you hear it somewhere else. You can't stick your head in the sand. You have to communicate. And that is one of the big keys, is that communication to go ahead with whoever you're raising money from, whether it's a family office, whether it's whoever. And we're dealing with family offices. I'll diverge into that a little bit. One of the family offices we're dealing with, these guys are sharks, okay? You know, don't go in there blind. They are sharks. Their agreements, you'll read them and you'll absolutely crap your pants. You're like, oh my God, they can do anything they want. But they are in business to make money. They're not in there to, they want to protect their investment. If you're going to them to go ahead and get money, great. You got to go in there understanding that that's your partnership with them. And communicate with them on a continual basis and understand. So communication is key, I think, is the big part of it. You know, there's 1,000 pieces of which Richard's an expert on every one of them. So just wanted to let you know about that. Coming in here and saying how bad everything is, but all these returns up on the wall are a lot of our previous deals. The average investor level return has been over 30%. Now, because of the last couple of years, that's going to be hurting a little bit, and that'll take it down. But bottom line is you got to keep going. Have a lot of character, have a lot of communication, and success will come your way. And that's pretty much in a nutshell, just anything I have right there. Any questions? I can talk about absolutely anything, but.
We had a quick one, Darwin.
Yes, sir.
Can you share how much capital total you've raised, and then any other strategies that really separated you from everybody else who never could scale their real estate platform like you have?
Okay. We've done about $1 billion in real estate. And so probably $400 million total in capital raised. Most of my capital is retail investors. So it's a lot sexier to go for the big money. And I'm not good at that, personally, the big money side of it. I've got on regular pants today. I'm usually in shorts. So it's hard to go in and meet with the big, family office, things like that, and being in shorts and a t-shirt. But that's the kind of guy I am. So most of my money has come from retail investors, single high net worth people. And you make money for them, and then they tell two friends, and they tell two friends, they tell two friends. When you have some experience, that's when I think it, and I hope I'm not stepping on any toes on what you're telling everybody. You need to have some experience when you're going into these family offices, and when you're talking to these people, they want to know what you've done, what's your history, what's your story. And so that's what we always do. We always told the story. I can go back. I've got a huge advantage because my dad had me up when I was 5 years old, up helping do make-readies on apartments. Had me re-roof a building when I was 12. So I grew up in the industry, which is a huge benefit on the real estate side. But then I started doing education and just saying, hey, I'm up here. We have this room for that same reason is, hey, let's talk about real estate. Let's talk about how value is created. Let's talk about the risks, the rewards, the tax benefits, anything you want. And that was key for me, was give away the information. Is there anybody in here that wanted to be a real estate sponsor or syndicator? Anybody? Great, okay. Nobody, but there are people that want to do what I do. I guess not in this room. So I went through and I said, here's how you do it. Feed them with a fire hose. I gave away all the information, just gave it away. And when they realized how the sausage was made and how all that works, they turned and said, maybe not, I'll just invest with you. So don't be greedy about your information, okay? Give it away. That's my point of view, is you give away the information, you're transparent, you tell them what you do, what you didn't do, and if you're honest about everything, I've gotten more investors by telling people about the one property I lost money on than all the other ones that I did. So hopefully when we get through all this mess, I'll have another story that'll be positive. But right now is the time to get into the market with everything down and everything else. But you've got to communicate with them, you've got to get in front of them, you've got to give them something. I think you talk about internet marketing. What did they say? I forget the right words, but it's give them, and then sell them. So you got to give away things so that they can trust you and they can get in contact with you. And that you got to do that before you can sell them, right?
For sure.
Any other questions? Yes, sir.
Are you using AI in your platform, and how has it made an impact on your business?
AI, we're just dabbling in it. We use it on a very limited basis. Still not completely worked out. There's a lot of companies that integrate with what we're doing that handle that. They're looking at leasing and different things. But it's going to transform everything. AI is going to put doctors and lawyers and counselors and writers and artists. They're going to put them all out of business. Because it's just insane on how fast all that's going. But for us, I like the personal touch. I hate calling and having to go through all the prompts to get somewhere. If somebody's calling us, I want us to answer the phone and talk with a live person. It's part of customer service, and that can't go away in my mind, especially if I'm talking to investors. But as far as on the business side, you need to streamline whatever you can. Yes, sir.
I want to take a trip down memory lane. When you were first starting out, how did you build
How did I build credibility? I did deals on my own. Basically when I started out, the first property I bought was 14 units in Oak Cliff. And 12 of Oak Cliff, for those of you out of town, is a really horrible part of town. Really, really, really bad. 12 units were occupied by drug dealers. And so we went up there, cleaned the property around, turned it around, and that was the first success. And it's like a domino. You've seen I saw a thing they have a little tiny domino that goes up and up and up and up to toppling over like a 5-story thing. And so it's just the little ones, little success, build on it, build on it, build on it. And quite honestly, risk your own money first. It's going to be hard to go out and risk somebody else's money without any track record. That's not to say that it's not there. You find a great deal, you'll find the money for it. Yes, sir.
I'm launching a new interview series, and I'd like to interview you about that.
Of course, yeah, absolutely.
Awesome.
All right, cool. Yes, sir.
Last question. What would you say is your baseline cash-on-cash return your benchmark that you utilize for deals?
Baseline or benchmark cash-on-cash return that I use. There's a saying, you gotta grow before you flow. So the cash-on-cash return is relatively low. It's between 0 and 12%. About average, probably about 3%, 3 or 4%, especially on the early years. But where you really make your money is by creating the value. You have added value that increases the value of the asset, and then you sell it, and that's where the big part flows, big part comes. So really it's been about taking smaller investors and raising their overall net worth so they have more and more capital to reinvest. So they reinvest more capital, we make them that money. And so it's, especially at a younger age, you want to build that up as you get older. We've had a lot of people in their 70s like, don't sell it, I want the cash flow. I don't care if I get a bunch of cash back, I want the cash flow. So you've got to have both, but you got to have the money there. Yes, sir.
You just mentioned something that caught my attention, the tiny little domino could eventually topple a 5-story building. That reminded me of this, like, I don't know what it's called, it's a question, would you rather have a penny a day
Doubled for 30 days or $1 million, yeah.
Yeah, do you think that that's sort of a mental model, your domino? I've never heard that before, and I'm just interested in how that applies elsewhere.
How that applies elsewhere.
Like, is that a universal business principle for capital
I would think
raising?
I think it is because for me on real estate, I've always been able to scale and say, okay, I can raise this amount of money means I can buy this size deal. Now I can raise this amount of money, I can buy this size deal. And so it's all about scaling up. The first deal that I did as a sponsor, I had to raise $1 million. And I'm like, how am I going to do this? Oh my God, I'm going to lose everything, and I need $1 million to go ahead and do this. But if I can get the $1 million, I'm going to make a fortune. And then I broke it down and said, wait a minute, I only need 10 people with $100,000. And so I turned it around and said, okay, and I don't sleep until I have a solution. And so it was like 10 people with 100, I only need 10 people? 10 people. And break it down to those smaller pieces. Well, now we've got more and more and more and more investors. Well, rather than having 10, now we've got 1,000. So we can go ahead and scale that. So it does build upon itself. And that's pretty normal in all capital raising and everything else. You're not going to ride out and swing for the fences.
Awesome.
All right, thank you so much. I appreciate
Great.
it. Sure.
Thank you, Darwin. Appreciate us having you here.
You too.
Thank you.